year, or this year, so actually, Thursday next week, I hope you guys will join us today. And we're going to take the journey of owning the business, right from starting the business, what to do with 50, what legal requirements you have to think of, then when you do the different last year's talk, stuff. But it's going to take you through the whole journey, cards, tax, trader, shareholder agreements, pretty much everything that a business owner needs to know about owning a company. Right. Be very careful. As you're talking, stop me and ask me. If you're coming and you don't know the person you want to ask, just stop and ask, and then you can take it from there. I'm worried about the flight. Comes and goes. Yeah, I must suggest you were back. Been doing this for a while. Two businesses and things like that. All right. So we're going to start right at the beginning. Why did business sold? You guys have any idea? For the record. But basically, this process is working for using why authority to live in the start. That's right. So just like a house, a building, you've got to have your foundations in order. But if you don't have your foundations in order, your house is not as strong as it should be. The problem is, we simply don't know what all the foundations are. It's not all about the architect. So we don't know all the little bits and pieces, where to, what for, how often. So this journey will take you through that, and then you'll be able to see what takes place. Yes, as you have the tennis court in house, you have the right foundations in place, and then obviously, once you understand the steps that you need to take, you can build the building as high as you want to, and you can take it forward from there. So what you're doing is, these are the types of companies we have in SA law. There are a few others like public companies and one or two others like non-profits, but these are the most common. They all follow certain rules and things like that. The easiest one, of course, is the sole prop, the first one. That's just you. You are your business. You wake up in the morning, you decide to hustle, do a side hustle. So I can be tiring, paying as awesome food, and I can go to my Facebook, I can sit down to the stadium, and I can telegram that day. That's the whole about. Okay, so something a lot of people overlook, but just in a good place to start when you want to start a business. Before you go through all the headache costs of now going to see register the company, when we really talk to you about structure, just to do, and you're up and running. It's the quickest way for you to sort of validate ideas. Whether it's something you want to do, it's just easy to do 5 years this, you don't earn as much money, have to cost it into the cost. Okay. Like a normal company, you would use your ID as your company number. You would use that as a register. Like normally, if you invoice to somebody, they will be hiring my ID number, trading as possibility. Like a company invoice as your company name, you have your actual registration number, and the rest is all. So very similar. And that's what you end up doing. All right. Personal hospitality companies are really what you would get in front of you. Law firms, they have the personal record, hospitality. It's very similar to the sole prop. In terms of taxes and things like that, very similar to the sole prop. That's where each of the people involved in the company, they are personally liable. So I'm an accountant, I do something wrong, my business partners aren't actually liable. So I take the cost. Same with the sole and proprietor. If I make mistakes, it's on my own. Okay. So you'll see a lot of law firms, accounting firms are in. Personal corporations, although you can't register a personal corporation anymore, just to still have one, they're legal. You then it converted to a company. There was a whole push in 2010, push overseas students to BUI, and a lot of people spent a lot of money and you don't have to. You don't have to. How much annual returns are today? How much you do with that CP still for having? So the first corporation has from 1984 is still in place. So we've got lots of clients who are still CP, still paying. There's no threshold. You don't have to be at a certain threshold. You can be 100 million a year CP fund. And you don't have to become a company. Okay. And then the most common is the private company. So what you'll find if you go onto you want to register a company, that's what you'll get is a private company. CQI also is the most common. Okay, so, and that's obviously where we'll often say where you'll be a director of a company, you'll have shares, with the distribution. So, and the whole country tax is around that type of company. So all the different laws we operate in the country will be around being a private company. Before we go further on track, anything on the different types of companies? Any questions on that? This is my one. In addition, so what happens is, in the like if a solar enterprise, what it do, I take the risk. So I will go buy food at the supermarket. I will then try and tell them that they don't get told. I lose the money. So we personally increase the risk of having the company. Now, where if it's a CBY or a CC, if the business goes to buy, what do you take one thing? I'm a top enterprise. I go to the supermarket and I buy from the vendor, but I sell, pay in the afternoon. Once I've sold it to you. If I don't sell it to you, you can see me personally. And then hold me personally liable. I can get a purchase, a good report, things like that. But if it's a company, that's now going to buy the same food from the vendor. Thousands are paid in the afternoon. And in the past, that vendor has to the CC or the CCY. Not you, so becomes a big area in between you, the person, and the company. Okay. That's why what you'll find is a lot of CCs, like competitors that would basically find a personal system, very good. So they always try to get the director or the system or the personal system. Alright, so just that's where it has to separate. So preferably go and find a system personally, just as a company. If the company stand out and its own actual person in law. That helps. Perfect. So now we've chosen our entity. We decided now we've got our business and it's a CC, CDY, maybe the incorporated entity. What to do then? If it's just you on your own, you won't need a field. But obviously, to make your business work with a partner, you need a partner. Then you need the shared skills. A lot of people take someone who works with them. So we always recommend having a field. Now, it doesn't have to be a whole 40-page legal thing like the what that you have to be part. Just a very simple agreement explaining who the two parties are, what their risk is, and how they get, what roles they play inside the company, and then how they're going to get their money back from the company. So, and it's not, you want to set up this agreement for when things go bad. You know, in the 20 years I've been doing, I've never met a business partner fighting over having passed too much money. There's never been one argument where parties have said, no, you have the million. No, you take the million. No, I don't want the million, you take it. Never, not one. But they're all fighting over, no, but you took the million and I didn't get any, where's mine? That's when the fight starts. The leadership agreement with that in mind for when that fight starts. So while you're still friends, and you want the best things, not to show that you've got it. So, okay. MORs, memorandum of incorporation. So what you find is when you register a company in Turkey, they'll automatically give you a CR 15. Now that CR 15.1 will be A, B, C, D, E, there's a whole various range of things. And that's like the basic conditions of employment tax between employees. But that spells out how the company runs in the law. So there's certain things within the RCT can always have more things than what's in the law. Like your permanent contract can have more dues and you can earn more than the basic contract for basic income. But it can never be less. So your MRR is one that you give you covers the basic law. Okay. And that tells you how the company runs. When you have your shareholders meetings, when you have your director meetings, how much notice you have to give in company. So that's just because of MRR. And it's not a big document. The standard one you see on 50 is probably about 7 or 8 pages. These documents, the custom ones, can run over 100 pages. So you don't even come in the sense that when you're starting out as a basic interest, you can change it any time. So don't think that, oh, it's going to be a problem. You can change that later. Trademarks, always a good thing to have if you sort of have a unique mark. Like you tell that they change the name and they set a soft logo. While that's not the original logo of the shop, and the original logo didn't get soft like that, but that would be a trademark. And they wouldn't be able to use the name shop as a trademark because shop the company, all over the place. So that whole sort of setup, the shop, the name, touch the logo, would be a trademark. Okay, so how important is that kind of branding? It's not expensive to register, it's just R1,000. But if you've got a brand that you want to look at the I think about the 50 marketing, 50 having the company and amazing things really lost the company to the table. So little things patents are more around invention. If you invent something that's really like a mechanism or a facility, it's like a topic. The market is possible. But if it's something that only you can achieve on something, then there's a patent company. But the trouble is especially with the market of China and the online world, you could actually file a patent at the post office, and before you get your patent to the registration date, that product in the hand has actually done it already. But there are people who sit at patent office, and when new patents come through, they'll actually just scan through them a little work, and they'll literally see the patents, they're not actually the stuff. And because we can't patent the whole world is like very, very and expensive. And a lot of people actually use the product around. But what we found is that a lot of times we file patents, but these key elements out, like the part that works. You know, like for example, one of the most famous patents in Canada was excellent. And it's about the Elon Musk and Tesla. You actually put all the patents online for free. You could just use it. It's free, off the top. You want to share people stealing these patents. What he wanted was more people to drive in the electric car. You know how many people have to give you patents? Zero. For 10 years. There's only one company in China now who's actually making these patents. And the requirements to say it's a Tesla patent. But they even don't know. There's something like in England. They don't publish all the stuff. Because people have to steal. And then you've got to get a course, fight the course managers, kind of expensive. So patients will really, when you're coming really to the question, if they actually like this idea, you're going to sometimes really sell them well. Anything on that? Yeah, the trademarks are really good. It's something that you should do. And because they're cheap to do, I think it costs R1,000. And the minute you lodge it at 15, no one else can use it. And people do that. They'll use similar things. They'll try to use the similar looking logo. But because we've lodged it at 15, there's just a few things. One is when your company was formed. So maybe somebody was using something similar, they use it in the name later. Then they might learn that the company really formed, even though they didn't have the trademark. So there might be a dispute. But yeah, it's 570 rand, 590 rand to lodge the form and yourself at 15. It takes them about used to be 2 years, but now it's down to about 6 months. And they'll be able to send you your actual trademark application back. There's little tips like you wouldn't use, I mean, a national brand has, like Avis, for example, Avis for car hire. That's red on the Avis hoodie. Avis owns that red. They actually got somebody to blend that red. It's called the Avis red. So no one in the world can use the same red. There's strange. So, but what you would normally do is, when you file your actual trademark application, you actually do your filing and you just the black and white. And then your file your colors separately because if you file in black and white, you can use any color. If you file in color, you can only use those colors. There's a little tip that we learned over the years and things like that. So because it's cheap, and then what the first 15 years trademark is actually had it, and then you get a 5 years, and in 10 years, you can do just the top 10 years, and that's probably about 400 grand. And you can do it online now. Back in the day, put all the forms, Victoria, when you could post, you could post anything as well. So that's just one application. Another slide. What I didn't put on there, I want to catch you on yeah, so what normally happens is normally you need an attorney, so that's this part. Adam would Adam just do like they run a sort of part of the like attorneys and part of the DD cycle, they will do it across stuff. But it can still be expensive. And the thing is, unless it's coming global, you've got to pay for even all the actual markets that you want to operate in globally. Otherwise, if you paint it only in return, the guy sitting across the border in Zim, he just makes it and ships it into return. Yeah. Yeah, so it's got to be in the countries where they might use it. I mean, there are a lot of these, what do they call, like product stuff, like Indiegogo and things like that. So people that actually just launch the product on Indiegogo and then you can crowdfund it. And everyone pays like 200 rand for a board game and then they book it, you got the free game. All those Indiegogo products, they're in the top 10 where they manufactured in China before they even were actually funded. All of them, every single one of them. As part of the raises was to get money to pay for patients. China, they really made it. That country sold it. They've been selling millions before they even left. So this is not a getting behind. Yeah, on that, so one of the things I'm just mentioning and noting is just that there's a copyright. Copyright. Yeah, copyright is something that is used for apps. So if you look at all the sort of hierarchy, branch hierarchy in your code, like architecture hierarchy, all of those type of things. We know to use like apps that we built ourselves. But with the branch hierarchy, even with Apple, there's Apple using the branch hierarchy. Microsoft owns that. It's a Microsoft page. So Apple pays Microsoft like money so that people have to use that architecture and stuff like that. So what you'll find is copyright works well. I'm going to follow it just now. So I know. Thanks. So just on the copyright thing, so what you'll find is on websites, if you ever look into people's websites, right at the bottom, they say copyright, SME.TAX 2022. So anything you as an individual or as a company could produce in in a website, or you write a novel, or you write blogs or anything like that, you own that for as long as you're actually and alive. So the Copyright Act for games that works, because the code is yours if you wrote it, but the internet is not yours. So you can't patent the internet, whether it is that, or you can't patent the actual, whether it is that. So what you have is you can think of it as a book, like a novel. So you wrote a cool piece of code, which does have enough, but the architecture behind it is that you use other people's open source software and things like that. So copyright is a big thing. It lasts your an entire life. So when you die, if it's in your personal name, 75 years after your death, it's now open source. Anyone can use it. So all the books, 75 years, yeah. But if it's in the name of a company, as long as the company's around, then it owns it. So like all the old books like Shakespeare, Charles Dickens, all those things that were in their own name, they're now open source. You can use it. You don't have to pay anyone royalties to use them or anything like that. So copyright is a big thing. So a lot of your things you can probably get down on the copyright. So if you go for it's yours. All you just do is if you can prove that you actually wrote it. So it's source of author. So whether it's a company, so we've got apps, we've got analytic apps that we've built, and it uses the actual accounting software as the underlying core. We can't take we just copyright the apps because accounting has been around for 2,500 years, the way we see it now. The fact that you can do it in the cloud is actually material. Okay, so that's one little add on there. It's just the copyright. So that means a lot. Yeah. So everything you write, a blog, you have a movie, you search, you write a cookbook. That's all copyright. Everything like that. Absolutely. Absolutely. Yeah. But without a doubt. But also because the internet is live, I mean, people plagiarize all the time. Then you go to Boston and you say, they say, don't plagiarize. Don't copy things. You can reference someone. I know, I use Tyron's reference to this. That's fine. Happy days. But you haven't passed it off as yours. And that's when that's his success. And people find it fictive. It will actually just vary. It will depend on the person who owns the patent. A lot of people like what just with them. They just put them on the website and sort of free to use. Just all their actual sort of payment is acknowledged as a tester, as a professional, to sort of patent. And it will vary, and it varies from all sorts of things. Like a lot of varsities will have tests that go back to patent. Because the students are doing it. The students are studying and they've done cool things, and now it's open source on the varsity. And you can use all that stuff. So it'll just vary. Because a lot of people, if you think of like Alexander Bell, who did glass and phones and stuff like that. They're making phones now based on their chips, but they're not paying the actual royalties. So also it poses the problem is why a lot of people, whenever someone tweaks it, you make something that looks like this. And I just, like you look at all the car companies, when you launch a new car, the first people buying your new car are the other car companies. The guys who write games, Fortnite games, Roblox, the first person to buy your game are the guys who are making games against you. Because they want to understand what is done, how you got to color it. And all they do is just tweak it. Change one or two things, and now it's new. Now it's new. Your login doesn't do name, surname, ID. Yours goes country, cousin's name, nickname. Done. Sorted. Done. Until the next time. Because patents are really for something that's personal. I mean, a lot of people think they've got a new idea, but they don't. A lot of ideas are actually sort of variations of a theme. So, if you think of the first car that came out, when Merck built the first car, it hasn't changed. It's just got a lot more comfortable to drive. It's got a lot more add-ons and things like it, but a hell of a lot more and expensive. But the fundamental concept of the car hasn't changed in 150 years. It's got four wheels and a steering wheel. That's everyone. It's a car that hasn't got that. They're all like that. So even if it's iterated slightly on it, so that's why our patent should really be something that's brand new and no one's ever thought. Because then it becomes obvious that, that someone's actually going to copy it. It is very, very obvious. Okay. No, no. So Nikola Tesla did that with Luigi, tell him what Luigi's surname is. So radio waves, as you know, radio sound, so you can actually send music over. So they both invented roughly at the same time. One in Italy, one in the States. And they patented both, but the patent date was literally like a month apart. And Tesla sued them for years. And he won. Then they went to international court, then Luigi won, then it went back to Tesla, so that's what happens. But if it's yours, you can prove the sort of first use or first origin, then you'll win the court case. Yeah. But mostly what happens is that people, if it's something that's really good, like look at the iPhone. When iPhone came out, when Apple launched the iPhone, BlackBerry still had 4 more years later, was still the largest selling phone in the world. Apple was like, who's going to spend $1,000 on a phone? Who doesn't have an Apple now? That's the phone everyone wants. Because it's so good, it doesn't matter. Even when Samsung brought out similar features, even when Nokia brought out similar features, what happened? Where are they? Everyone wants an Apple. You see. So it just depends on the product. But patents are expensive and you've got to fight them. So that's a lot. Unless it's something that's like unheard of. You're the first person ever who's doing it. Yeah, so what they normally do is they do it on purpose to fight, or how would I say, not to, yeah, so what they normally do is they buy up a lot of local companies. So they'll buy up a company because it owns a whole bunch of patents. So that's why Microsoft bought Nokia. So Microsoft bought Nokia to get all those patents, because Nokia was the first person to invent the cell phone. And there's certain things inside the architecture that everyone makes use of. Now, all those people pay Microsoft. So even though, like, if you Google it, if you go online, you want to search, you search it into Google. A lot of the architecture is owned by Microsoft. And they pay Microsoft millions and millions to use it. Like, even your Apple phone, you use your Google Maps on it. Even though they've branded it to be iMap, whatever. But it's actually Google. And they pay Google $84 million a year just so you can use the map. You see, so that's why they'll buy up all these little companies, because once the page is the name of an entity, as long as that entity is allowed, someone will use it. But then the next day, that could be different, you know. Like in Tesla now, gets electric cars to work everywhere. The guys who own all the patents on petrol, they're useless. They worthless after that. What are they use it for? And the same happened, like we use the LEDs, incandescent light bulbs. Like any country, you can't even buy them. You can't go buy a light bulb like we normally know. Because everything's LEDs or stuff like that. So it's interesting. So they have a lifespan as well. Okay. Alright, so you've got your business, you've got the sales agreement, you've got your ideas in place, you've done all your cool things. Now the work starts. So what happens next? So when you register your company at CRPC, very costly, SARS makes you send all that information to SARS. That's why you get an income tax number. Before you've done anything, before you even got the documents back from 50, you got an income tax number. And that's just registered automatically. Okay? So now, you've got a company number, registered, and your income tax. And the reason for that is that even if you make no money, like zero profit, SARS wants you to put in a tax return, even if the tax return is no. Because our tax base, and most of the tax rules, is worked on trust. SARS only knows what you tell them. Or if you post it on Facebook and it's large, then they know it from there, or in the newspaper. But generally, how the tax system in the world works on, it's actually like an honesty bar. You know, someone gets muffins, R1, you walk on, put the R1 in the jar, take a muffin. That's how SARS works. You tell SARS what you earn. You tell SARS what taxes you pay. You see, you tell them that. And if you don't file that in return to tell them, they're assuming you're stealing from them. And then it's a criminal offense. They can actually get the police to come out and arrest you. But they don't arrest you for jail, generally. They arrest you just to force you to file the actual return. Okay. So that's the first thing that happens, income tax. It happens as soon as you register your entity, irrespective of whether or that if it's an incorporated entity, a public company, if it's registered by a 50, it goes to SARS. Trust not so much, but it goes to the master, and then you go forward from there. The next thing that you'll register in your last plan of your business is actually UIF. So UIF and workman's comp will work hand in hand. So what they do is that the minute you employ a person, and practically they want to try to do it, you take a salary as your first employee. We don't normally advise that for the other plans. But as soon as somebody works for more than 21 hours a month, you got to register and for UIF. And then you got to register for workman's comp. And a lot of employers think workman's comp, what is it? Why do I need it? So it's actually a very good thing. And the marketing around it is really crap. You know, if the government did a much better job marketing workman's comp, a lot more people understand the value of it. It's like an insurance policy. If you work here at the shop and you went down the stairs to go to the bathroom and you slipped on the stairs and you broke your leg, ambulance comes from the private hospital up to in Msanga, takes you to the hospital, all paid for. All paid for. You don't have to go to Kevin Joseph or worry about private hospital. Go. All covered. You don't have to pay nothing. It's free. Just the insurance pays it. So what a lot of people don't get is that your employees, and we have a violent country, so even if it's driving on the road, it happens. So from the time your employees leave home and they come to work and then go back home again, that's covered by workers' comp. Not if they stop at the bar or the shop, but directly home. Then they cover. So you just think about a taxi accident. If you're on your way to work, workers' comp. You go to your place of work. So a lot of people don't understand the value of it, but it's such a good thing to have. So think about a small prohibition. Your staff member falls off the battery, breaks the back. You feel guilty because it's your staff member, it's out of your vehicle. You want to try to help as many people falls. You're never going to make it. How are you going to afford R500,000 in doctor's fees and surgeons? Workers' comp sorts all of that out. You see? Yeah. So there's it ranges per actual industry. So from 0.01% for like gold jobs like ours, like accounting, to much higher if you're in construction or working in smelters or something where the risk is higher, working in nuclear plant, then it goes higher. But the company pays that, not the actual employees. So it's based on your actual payroll, and normally end of April you submit it, and you actually suggest your payroll a year in advance. Then they work out what the cost will be, and then when you submit now the next year, the actual payroll, they then give you a bit of a credit or they top it up when you pay. So it's generally every April. So one total tax will have that the company pays. The workers' comp sorts out the entire contract, the whole thing, the whole thing. But there is, in any type of insurance law, there's a thing called fair use. So now, if that taxpayer, which they all have very good medical aid, and discovery make sure, if, if that taxpayer gets working, if the workers' comp pays, so maybe they put in an ambulance straight to workers' comp, maybe they went outside of the field, outside of the stadium, something happened. They're driving to work. And then obviously they put him into the hospital and he's already doing surgery, things are happening. And the staff, it won't be sufficient for the government, unfortunately. But this hypothetically is sufficient, and the staff put in their workers' comp claim and it gets paid out. And then the medical aid pays. The medical aid has to reimburse workers' comp for fair use because you can't have two, it's just insurances. You can't have two medical aids. You can't have two, kill them. That's what they do. You can't have your car insured twice. So that's what they do, fair use. So yeah, and it's a good thing, and a lot of people don't understand it. So this is something to think about. Paying is the next thing. And this I've put in sort of sequence of order that's likely to, you could do all of these in the first day, but as you grow your company, this is the sequence that you're likely to see. Pay as you earn section, when you're above the threshold, now this year, I think it's 91,000 a year earnings. Under 91,000, you get like a rebate, you don't actually pay. So once your sort of pay in your actual payroll gets above the 91,000, that's when your staff are going to be paying pay again. So that's when you register for pay again. Otherwise, it's just pay UIS. Because there is no register pay again. So a lot of people make the mistake that they register with SARS on e-filing for pay again. And then you submit pay again, UIS, SDL on their form. But they don't register in the Department of Labor. Because UIS workers' compensation are at the Department of Labor. You've got to register there first. So how that works, I'll just get out so that finish my point. How that works is that you pay the money to SARS monthly. It sits in an escrow account. But then you've got to submit the UR19 form to the Department of Labor every month, also on the 7th. It gets the form, it ties up with SARS, and transfers the money out of the escrow account into the URS account. So that's how it works in the background. So a lot of people don't then register at the Department of Labor. They only register at SARS. That's a bit of a nuisance. You do fewer places, fewer forms. That come out a heck of a lot easier. So then you're going to ask a question. Pardon? Monthly. URS is monthly. So what happens is on your paycheck, cool. Anything else? Any other? Good. All right. SEL, where that kicks in, is once the company sort of pays in their payroll exceeds R500,000 a year, then the company must contribute 1% as SDL. And that goes on the e-filing, and then you pay it over and they send it to all the different features. Not that we've ever seen any of the features helping any of the skills, unfortunately, but that's where the money goes. And every company that has a book payroll higher than $500,000 a year will pay it. Okay. And then obviously DOT. DOT is obviously the turnover exceeds $1 billion. Now, started talking to the changed the legislation a few years ago, and what they've gone and done is the legislation says when you are aware that the turnover will exceed $1 million, then you are obliged to register for VAT. So when you do the fancy business plan to get funding from the enterprise development or CEDA or TIFA, and you suggest that in your year you're going to exceed more than $1 million, according to the law, you have to register for VAT, whether you have it or not. And you're going to start charging VAT, and you're going to start paying VAT, which is really dumb in terms of that. Or if in a 12 months cycle, you're exceeding $1 million. So they're trying every hand to pay that. Because if they can prove that you should have registered, what they're going to do is they're going to want to get 15% of all your sales, but you can't claim any back against it because you never registered. That's their penalty. So you can imagine, you ask your business plan in the 12 months to 900,000, and I want my 15% of the 900,000, but you can't claim anything against it. Okay? So how we are treated is that when you, so obviously you obviously have an RFP because you don't just get a purchase order out of the blue. But when you get the RFP, you know that when you get like a few for the on-site purpose, when you get an RFP and you know the job is going to be over $1 million, then you register for that. But what happens is there is a window of, if you might not get it, they might not accept it. So on e-filing, when you register for that, you can register for that in the course of a tender. So it could be an RFP, and what they do is they then ask you to put in the RFP number or the tender number, so that if you don't get it, then it falls away. You see. But also it's an outfit, because it's not stupid, that now they know if you won that tender, they won't do that. They're going to come find you, you know. So that's how they're linking up. They're joining the dots. You're applying for that. And they'll say it, because obviously there'll be hundreds of people applying for the tender. It won't just be you, you know. So stuff like that. So then they could link to well, what you do is once you get it, you register for that. So generally with these large, because RFPs are written from larger corporations or governments and departments, and not cost. I mean, we're just doing a mining company now. We did an RFP last year. We got the tender in January. We still don't have the purchase order in the box. But our contract is signed to start work the 1st of February. So 2 months have passed. We still don't have a purchase order. So we do have time, and luckily with e-filing, getting things done like that registration can be as quick as 1 day, you know, or 10 days, you know, sometimes. So those are the type of things that we do. So if you've got somebody, always have an account you can track to that you actually file it, you do it fairly fast. Yeah, that's how you normally do it. Okay, cool. And then obviously that will vary. So that is not so cut and dry that it's every second month. It's a turnover of about 30 million each year, you do that every month. If you are really micro business, you could actually apply for your back only every 4 months. And then some of the micro farmers only do that every 6 months. It will be on harvesting season. So you could have all this, no sales, but you're totally hot because you hiring the fields, you're buying people, you're buying all that stuff. And only later when you harvest and you sell, then you invest. So then they're allowing the smaller farmers to only do that like every 6 months. So it's not just a 2 years, it's a month. Okay, so look at those things because what kills a lot of these communities with that is tax. We invoice the client, 30 days later, or 60 days normally in terms of charge, you're paying that. But if your client hasn't paid you in their period of time, where are you finding that money? Overdraft, out of your credit card, your own pocket, that's where the money is coming from. So you want to have this understanding of that cycle so that if your client's only going to pay you in 190 days, 180 days, 6 months, you've got cash to pay your back. Okay, so you must understand this. It's very, very important. So that's also be clear. Okay, online. Okay, well, it's just around this. Okay, so we'll need a second mic. Just take note of that. Okay, cool. We're running a real test at our office. So you guys are the 30 bits. So from next month, there's going to be another 50 odd people online all over the country taking part in Central. So we're testing now to see how it works both ways. So now you guys know what this man's interrupting with these 2 minutes. That's right. Very good. Okay, so the important thing there in terms of you do trading and now you want to, will you be liable for the past trading if you register for that? Only if your turnover exceeded R1 million. Yeah, in the past, any of the 12 months in the past, if it exceeded R1 million, then you'd actually be liable for it. But generally when you register for that, it's from that registration date forward. And it does happen. I mean, sometimes you're starting out slow, and then suddenly your things click, and then you start getting a lot of work. And the trouble with us being entrepreneurs, what are you doing? We work, we're the time for nonsense, we put it, and then 6 months pass, and you should have registered for that 6 months ago, but you charge no one back. So there are these things that happen. When you talk nicely to stars, to make that, no, but we certainly heard of that, and you talk nicely to stars about that. But I'm just sure that to ask you about where does the cash flow come from? What is advice for compensation? The cycle of invoicing is longer than the best time. This is like the actual pro forma invoice to your client. So that's not a taxable invoice. That's a pro forma. And that's where you don't end up paying back on that until you issue an actual back invoice. So what you can do is you can issue your client the pro forma invoice so that they can put it in their system and get it through. And then some of them don't even know it looks just like an invoice. But normally what will happen is then before they make payment, you issue them the actual backable invoice. But then the payment will have to be in 7 days or something, and then it's fits into the same cycle of that. So trust your clients. A lot of them don't understand the problems of SMEs. So if you satisfy this, I'm going to give this invoice after pay back. But you're going to pay me in 90 days and in 60 days I'm a class asking you, where's, here's my cash. So satisfied. I'll give you a pro forma, and when you're ready to pay me, I'll issue you the actual invoice back for that month. And it falls into your back title. Okay. So that's one way. And we use that a lot for you. But also you, like, especially on your side, you invoice in your client, and you know they're going to pay you 50%. And now you think, well, I'm going to pay back on that now. So when you have a client, you just give them a quote. They pay a deposit of the 50%. Then when the product is finished, that the modeling website maybe, when it's finished and you then invoice them for the second 50%, then you invoice them. So now they'll pay you the other 50%, and the first 50% is not so hassle because it was on a quote. The deposit isn't so hassle. Okay, so these are little tips and tricks to understand. So what you do is you never what people help you say? You might bend it or bruise it occasionally, but you never break it. Yeah. Top of our, we've got blogs on all these things on our website, and then no one knows Snare. She's our resident accounting expert who's half Russia as well. So she can definitely help you with these little tips, or she'll ask me to help you. But these talks we put on our website, so these type of things, that's what they do, and recording now. So a lot of the stuff is available, and then and that's when you learn it, because otherwise you never know. You'll never know this stuff. Okay. Cool. Now you think that was the second. There's more. What did you do now? Did you lose your activity? Okay, well, the Wi-Fi. Once you've done all your strategy, these are other things that SMEs don't actually think about. One is the annual and return. And now this troubles a lot of SMEs. They confuse the annual return with the annual financial statement. So annual return is what you pay CRPC. So when you register your company, what happens is that day you register, every year in that month, you've got to pay a fee to CRPC. It's normally about 50 rand, 30 feet, but there's a whole bunch of documents that you do online, tell them what the turnover is, are you using an accounting platform, things like that. Yes. Thank you. And then, if you don't do that, I'm sure you would have seen people, some companies have gone into that sort of deregistration. So if you don't pay the annual return to CRPC, they think you're not trading. And because you're not trading, they close the company down on the register. And a lot of people think, I wasn't using it, so what? The problem with that is, then the shareholders become owners. But that can't be owed anyone any money. Even so, you didn't put in the no return that you should have done for your taxes. Even though you didn't pay it, you have to put in no return. You personally liable. You'll be liable for the penalty, you'll be liable for the fines, you personally. So don't ever let a company just go good on 50. Don't think, they're going to do it, who cares? Government's a bit slow now, but they're catching up, and they're going to start coming. It's coming off the clients from 10 years ago. So, first I think also prove that going through the process. So, my guy is that after the company level work forward. Yeah, so what you do, how the process works, you go to 50, you'll pay the outstanding. There'll be a penalty of 150 rand, but there'll be generally 50 rand a year. It might depend how many years. I see they've got quite quick now, so by the second or third year, they're really putting the company into like a deregistration stage. So you might have to pay like 500 rand, into penalties and the annual return. Then what you do is just, if you've got someone who's on filing, if you probably never created, you think you haven't done a tax return, so just get an accountant to get it onto e-filing and do no returns. So just no returns that fast, the proof is no taxes owing, get the tax clearance, submit that to CRPC, they then kill the company on CRPC, that's like 3 months later, yeah. And then what you do is you send that back to SARS, and they take you off the tax register. It's a bit of a process, but done properly, it shouldn't take more than like a week in terms of effort. And then you just wait for the system to go through the cycle. But definitely worthwhile. Especially for what SARS did, I think might have been about 5 years ago, roughly. They started introducing penalties for non-submission of tax. So when you got the tax number and stuff, it starts at 250 rand, and then it starts to increase, and they start doing monthly, and suddenly before you know it, they're owing 10 grand. And it's all because you didn't do a no return 1 year. And they compound very fast. So that's what they're going to start doing. So then, if your company actually gets deregistered at 15, you're going to be liable for that tax. Personally. So it's worth paying an accountant $1,000, $2,000 to get it done. Definitely worth it. So that's what annual returns are. So be aware of that. And it's CRPC, not SARS. Free certification, you all know that. Very good piece of legislation. Implemented badly, unfortunately, but very good piece of legislation. So all of us have to be certainly tendering or be putting an RFQ, you want to be a vendor on the vendor list. And, so for most of us, and even the certification affidavit will be fine. Our turnover is less than 10 million, so you will do an affidavit, and it'll be depending obviously on the equity status, would be nothing that would be as low as a level 4, but I'd be a level 4 if I was just being on my own, having a business. I'll be at level 4, and then depending on if I've got a partner, 3 partners, then you'll be level 2, but if it's your business on its own, level 1. Okay, that is the actual starter. And then with security, which is between 10 million and 50 million, you can also do an affidavit now for the last 2 years or 3 years. And it's the same sort of actual data depending on your who the fields are. Level 4, level 2, level 1. Okay. And affidavit is just you download it, sign it at the police station, they stamp it. Nursing stamp it. It's an easy thing, okay? Okay. So that's the easy certification, and that's generally the annually. So what we tend to do with our clients, where they need these things, we just make a roster, and then every year, as soon as that date arrives, we just do everything, send it on to the client. We tie it into the annual return date. So then they get the annual return, they get the DE certification, they get the PCC, the tax clearance, and it goes forward from there. Okay. PCC. So this is the most contentious piece of legislation. And it's a real actual bugbear. Because you know why the PCC came in place? And does anyone know why they introduced the PCC? What is it? Tax clearance and certificate. The reason it was brought into place is to stop people getting paid without tax money. So what they wanted, the government introduced it, and the theory behind it was if the services the government is buying from you or the product the government is buying from you, they're not going to pay you for their product if your taxes are not up to date. So why should you benefit from the country's taxes if you don't pay yours? Which great piece of legislation. I don't think the group has ever got it. There's a lot of things. That's the just, but that's what I was interested to do. So that if you were applying for tax money for your services, the government can withhold that money until your taxes were up to date. The bad part about the legislation is every single other company in the country, you can't become a vendor for them on their vendor list without the TCC. And your tax affairs are private. That's absolutely equal to anyone else. And by them making you put it on their vendor list, they require you to share your personal tax information, which is illegal. You know that. There are even some companies that go so far as to not wanting to pay you for your services unless you can give them a tax return. No company can withhold your money because of the TCC except the government. No one. So that's no. Their tax clearance is their problem. It's got nothing to do with who their vendors are. Nothing. We use the flow-through principle for your empowerment, for your enterprise empowerment. Yes, they do that with BE to show that they're helping smaller BE companies and they've got the flow-through principle, but not for tax. The taxes is everybody's personal tax, and it's personal. Just when you fight it, something. MTN years ago caused thousands of SMEs to fold. They're taking on services, and once they're tax clearance before they pay them. And these guys couldn't get a tax clearance because they needed the money from MTN to pay their tax or pay their taxes. So they couldn't do it. We had to then to get a authorization from SARS, which we sent to MTN system. Took some of our clients. And then MTN only paid those clients of ours. No one else, because they never bought the clearance. Thousands of people folded. Yeah, because of that. Totally against the law. So just be careful. But corporate wants your TCC, so why? It's my tax return. It's personal. And they'll drop it immediately. But they do it because they want to see if you're a good corporate citizen. That your tax affairs are up to that. But it's actually got nothing to do with it. Because your tax affairs might look the way they look for any number of reasons. And mostly, for most of us, it's because the government hasn't paid us. Unfortunately. Not anyone else. How many SMEs are waiting for the community council to pay invoices? 6 months, 8 months, a year and a half. Doesn't happen. So that's why. Okay. Public Access to Information Act. It's a piece of legislation introduced around about 2010. Never really got applied. The larger corporates yes. Smaller businesses that keep pushing it out every time. What the essence of the act is that, as the name implies, Public Access to Information Act. The public, you've got to produce a manual to show the public how they can access your company information. So what you don't know is I can send you a letter and say, I'd like your shareholders register. And you're going to go, what? And you go, Public Access to Information Act. And you have to share it. What you don't share is obviously operating process and stuff like that. But the minute you file your annual returns at CRPC for your annual return, your annual financial statements are now a public document. So when you register your business at 50, who the shareholders are, who the directors are, that's a public document now. So you can share that information. Where we've seen the Public Access to Information Act being used mostly in international politics, strangely enough. I mean, the most recent case now was with the cadre and deployment meetings, where they were asking you, how did you actually now, and deploy certain people to different roles. That's what was used recently. So it's a powerful piece of legislation, but they keep pushing it out. So for the smaller companies, they keep pushing it out, and they only have to comply, but someone that asks you, you will have to do it. Okay. So just be aware of it. It's crazy. employment equity, and then obviously what the act and around that is to do to because of our heart, you want to make sure that the employee in your company match what the population of our country is. So that's what the Employment Equity Act came and said. You can see that, the employees are they equitable and things like that. Again, for smaller companies, they haven't enforced it because generally, for smaller companies, it's one or two people. And in a smaller company, it's generally family or close friends who form the actual company. So it doesn't really apply to smaller companies. So they keep pushing it out. Although there was talk that they want smaller companies to do this application every second year. But it hasn't really sort of accepted more for companies with 50 staff and higher. So it is a piece of legislation that keeps throwing around. So just be aware of it. And of course, your annual financial statement. That's your company's financials. So the Companies Act, 60 days from your end of your year, so if your financial year ends in Feb, 60 days from there, you must have drafted the annual financial statement. No one cares. Really, no one cares. So people go in there, and because of the way humans are lazy, we all go register our companies for the tax year of February instead of studying it. So what we do is we can't deal with hundreds of clients. We study it over the years because there's no way we could have all our clients finish their financial year in Feb and do 300 sets of books in 50 days. It's not going to happen. So, but the Act does say it has to be done within 60 days of your financial year. So just be aware of that. And those are the only people who ask for it would be banks if they want to do an overdraft, or if you're going for a funding, do a funding application, things like that. So, and it's separate from your taxes, because the tax return, even though your financial year ends at Feb, and your financials are done 60 days later, your tax return to the company is only January the following year. So February now, 2022, that tax and return is only going to go January 2023. Different from your finance. And they wonder why we look around and what the heck is going on. All these laws. Okay. Questions around this on the clock? All good. Okay, cool. Okay. So that's all the laws, legislation you have to deal with as register. So now if you think about all those laws that we just been through, and that's only the tip of the iceberg, for different industries as well. How many forms do you think you have to submit every single year? Just to compile, just the ones you went through. Any guess? 10, 100, 6. Pardon? 6. I want to work for you. Optimistic. Anyone? More? 14, 97, 14, so. Yeah, I'll put you out of your business. Just the basics. That is the basics. Now, if you in the food industry, there can be a business license. If you're in the liquor industry, there can be liquor licenses. If you're in the logistics, there's going to be all the logistics licenses. This is just the basics, just to get by in a normal year. Ridiculous, actually. And then they wonder why we moan about red tape. It's crazy. Absolutely crazy. Yeah. And this could be worse like that. If you're doing that monthly, it's called that tax. So it's definitely crazy. Okay. So let's just give you that indication of what's happening. All right, cool. Now we'll get into the business itself. Done the legislation, we know what you have to register for. Now it's your business itself. What do you think about as business goes? Okay. So, finances are the first thing. You always think about your business, you want to make a profit, and things like that. So these are things that will be good for financial sort of foundations of your business. Something that's easy for you to sort of get to. So look to the future. So you look at the budget. So when you started out the business, you had sort of some vague idea of what you want to sort of earn, what it will cost you to earn that amount of money. And it might not have been 100% right, and that's fine. It doesn't have to be 100% right. All it has to do is just give you that excitement to go do it. Just the real stuff is different from the Excel spreadsheet that we were working with for all of us. So look to the future. Cash is king is not just in cash, but the fact that your clients are paying you quicker than what you need to pay out the money. So that you then using other people's money to get that. I mean, if you could get a supplier who will take, you only pay their invoices every 60 days. So like, for example, like Pick and Pay, got a great model. We pay cash. Everything is taken there. You got to Pick and Pay cash. They only pay their supplier in 90 days. So that product on the shelf has been sold 14 times before they pay the first invoice. Yeah? That's the cash is king. So the cash flow is actually positive from the first day. And people think that it's difficult as an entrepreneur because I just want the money and get going. But when you set those boundaries from the start, then you slowly get there. Sometimes they won't have on the first day, but obviously like a sponsor shop with cash. You know, money's in immediately, that's fine. But other industries, it won't actually work like it. But if you set the boundary, that's what us as an accounting firm. Accountants normally get paid after they've done their accounting. What we did, right at the start, our clients paid us in advance. We broke up the installment over 12 months, worked it out easy enough, and they paid us each month a fixed amount. And when we started that years ago, people laughed at us. Oh, they're accountants. You're mad. No one's even going to pay you before you've done any accounting. Now they all do it. But it took 7 years for everyone to see it. It wasn't on the first day. And we had clients tell us we're mad. We said, well, we don't want to do it clients. We didn't want them as clients because we don't have to pay them for money. But once the job's done, once our business is done, how do I get my money back? I don't. I'd rather not waste our time. See, so that's how we do it. Revenue completion. So what that means is that your financials must give you a clear picture of your business. And I always, like a lot of people, it's going to come up in the later slide. As entrepreneurs, we all know three things. Who owes us money? Who do we owe money to? How much is in the bank? And your books of accounts tell you those things. So that the invoice the customer that haven't paid you, you know who owes you money. If you've taken product and you haven't paid yet, you know who you owe money. And because our banks all have apps on our phones, we check every morning to see how much money is in the bank. And those are the things that drive the time. So your books must have that idea in mind. So when you're looking at the books, then when you can go on an accounting platform, you can see where that title is. It's giving you all the information you need to make the right effort. So it's just waiting. Yeah. Accounting system obviously is that actually works. And there are a lot of free ones. And a lot of entrepreneurs don't need the whole accounting practice themselves. Entrepreneurs really want to invoice. They might want to receipt the actual amount the client paid and then issue a statement so they can take the money. In terms of depreciation and asset allocation, most entrepreneurs don't need that in the actual day-to-day operating of their business. That's where you want an accountant to do that sort of basic stuff. You know, you don't want to be bogged down by it. You don't want to become an accountant. Trust me, accounting is boring. Rather than entrepreneurs, do this accounting stuff. Okay. And then obviously the last thing about your good finances, staying at a troubled start. So if you've got all those things in order and you're thinking forward, then you know what SARS wants from you. And you can submit the right paperwork on time, avoid penalties, things like that. Okay, so that's what's the basis. Doing your budget. Budgets are important. If there's anything you do, when you get time on your hands, when you're starting out, that's the thing you got most of. You might not have money, you might not have all the time, but the thing you got. And with free internet in a lot of places, I mean, right down here in Tonga Beach, the internet's free. So you can actually just sit there and right down to the internet's free. And you can actually search the internet for a lot of information about building the right sort of budget, give you information about your product, spend as much time as you can on that. Because any funder is going to ask you, what do you know about the product? What do you know about the market you're in? Who's your competitor? What are they charging in terms of pricing? And things like that. And once you have all that information, that goes into your behavior. And the thing is, you don't know what you don't know. So put it down as much as you do find out onto a simple Excel document that you understand. And then talk to someone. Talk to the person next to you. Talk to a friend who's got a business. And they're going to ask you questions. How does it have transport in there? Then have internet hosting, or you don't have a pager. Just Coca and Yoko are nice and cheap, but it's still going to cost you something. What does that cost them? They might have a card machine. And then you'll add to it, add to it, add to it. Okay, so don't think it's the final product. You're going to keep building on it. So work out on the budget. And that'll give you exactly what tax you need. What products? There's a lot of things you can do where you don't have to spend lots of money. When I was watching a YouTube video of a guy who took a paperclip, and in the space of a month, he coded the paperclip up to a house. Which was insane. It was a little small of a house, but it was still a house. A little one room from a paperclip. So, and there was another one where the guy in the UK, youngster, couldn't go to college, couldn't study, was walking home, and the wind was blowing, and then a 10-pound note, which in rand sounds like a lot of money, but a 10-pound note flew against him. And he took this, thought about the 10 pounds, he said, what can I do with the 10 pounds? So he went to the local greengrocer, he bought a car shampoo, and he started washing cars. And as he used that up, he did something else. And he ended up earning something like £275,000 in a year. Just from those 10 pounds to start with. I mean, these are always great stories to hear, but I mean, that's where it starts. So a lot of the things, like separate results, you can easily add up with that and you can set it. So it doesn't require a lot of capital. What it requires is you as the entrepreneur to get up and do it. So understand what it's going to cost you. It's crucial. How detailed must your budget be? Again, what I was saying earlier, you only know what you know. So make it as detailed as you go. And once you talk to people, you'll add to it. And as you grow as an entrepreneur, you want more information, you'll add to it. So it doesn't, there's no one-size-fits-all on that. And then, of course, how much you should pay yourself. Crucial. Every entrepreneur we've ever met has underpaid themselves. Every single one has underpaid themselves. And they paid themselves last, which is even worse, after paying everyone else. This has come from a corporate job, or a job before starting your business. That should be your minimum. That should be your minimum. You might not be able to physically take the money because of cash flow circumstances, but in your budget, put that as your salary. And the reason why is that when you're working at what your actual budget does, works at the price of your product. And if you've excluded yourself and you need 100,000 rand a month to get by, there's 100,000 rand hole in your pricing structure. So you might not be able to pay yourself 100,000, but your product has priced in 100,000. So when the business starts running, you will be able to pay yourself. And every single entrepreneur we've ever met has not actually done that. Every single one. I'll pay myself out of the profit. It might not be profit for a long time. You're going to be borrowing from your family, you're going to be using your credit card, credit card, done that, all those things. So it's important. And it doesn't have to be such a big number, but whatever you would do, or if you, I'll go to suggest you that you're not sure. Look online. Look at this study. There's tables for everything. An average plumber will earn X, an average IT person will earn Y. But that is. And you might say, no, I want the CEO's job. No, you're starting out. You're going to be into level 4, so you might be taking 20. But when you've got to start, you will be earning the CEO's pay. But know what those things are. So you can build it into your behavior. Crucial, crucial, crucial. You're going to come unstuck every single time. Because when the time to pay you, Now you want to increase it. But you just keep working there for 3 months, and now you want to put up the cost. And you go, but I want to sell it. You should have thought about that before you were selling this product. So you walk away with only one thing, is that. Remember that of the whole day in this each one. Yeah. So things about income tax. A lot of people, when you have your business going for a little while, maybe a year, your existing income statement is the basis of your budget. Because part of that is the real world, based on the real world. There's expenses inside that you can think of. And that'll be the basis of where you're going in the future. So always use your existing income statement as your foundation. Okay, and you'll see it in your actual books that build on from it. You might add an extra product, what will that cost? You might add an extra staff member, what does it cost? And that'll come out of your existing income statement. Okay. So yeah, there are things that can be nice and simple. Income statements are normally split into obviously income, as the name implies, cost of sales, the cost of the product. So if it's something like bricks, brick costs 90 cents, so that's the cost of the product. You might sell it for R1, so that's the cost of sales. But then there's things called operating expenses. And those are expenses you're going to pay irrespective of whether you sell one product or not. And what is important, I mean, this is just a random list of expenses. But what's important is to identify those expenses you're going to pay irrespective. Whether the shop stays open on the corner and no one walks in, end of the month, there's rent, there's telephone, there's internet maybe. Find out what that number is. Because like your salary, that is key. We call it the golden number. So then you should work out if operating expenses are that number. If you're selling a product on, your gross profit should be able to cover profit. So if you're buying bricks as an example for 90 cents and you're selling them for R1, you're going to pay a hell of a lot worse to pay for a 10,000 rand operating expense. So those people are going to go, those bricks are now set to be R1.50. You're going to have to sell a lot less bricks to make it. But if everyone's selling bricks for R1.50, you can't be selling it for R450 unless you've got our bricks. Marketing pays. So you might have our bricks and then they're going to pay R2 a brick. But that's why you've got to understand it. Because if you can't cover your operating expenses, you're out of business. Totally out of business. Okay. So between your salary, and that's where your salary fits in. Into the operating expenses. So if you can build that in there, you now know my gross profit margin has got to be enough to cover. And it might be fine if you're selling, I've got a client who does treatment plants. And the treatment plant sells for 3 million rand. But his profit is just over 1 million. Give it a little bit over 1 million for each one. You don't have to sell one every year. No person. But how many people are buying treatment plants? It's not like you want one in your back garden. You see? So that's the thing. So if you do your research, understand the market, what the prices, you could only have to sell 1 or 2. And you would have a client to sell sports cars. And you only sold about 20 cars at once. But they're all top of the range cars. And it turns over last time we checked, just over 200 million rand a year. One man. 20 cars a month on average. 200 million. But he's only making 60, 100, 150,000 a car. Yeah, but that's still going to work out to 15 million a year profit. So that's why okay. Know what you want to earn. Know what it costs to keep the doors open. And it's in range. I mean, if you're running the sponsor from home, it's cheaper than opening on the beachfront, where you're going to pay rent to the council. So just understand where it fits in. It doesn't have to be 1 million rand every month. You might build it from 10,000, 15, 20, until it's 1 million rand a month. Okay. Slow steps. Okay. Overhead, important. Just some examples of simple books and complicated books. You don't worry about the details. It's just an example to show people. So we'll often start out here. Just basic stuff. Turnover, cost of sales, am I making money? Cool. Then when you expand, you might want to say sales by province, sales by product, cost of sales by product, sales by importer, but that will come from more information you don't need. You don't need all of that on day one. You know, Shopify wants that on day one because they want to see exactly what your product is selling the fastest in the shelf because they want more of that. You don't have to worry about that. Okay, so just it'll fit according just to your actual business. So don't stress about how it looks. As long as it makes sense and you can explain it to anyone else who asks you about it. Okay. Basic record keeping. As I said earlier. Those are your books. Don't let any accountant talk fool you about income statement, balance sheets, complicated cash flow. It all comes down to that. When you make sales, and if someone hasn't paid you, that's now becomes he owes you money. When you buy products and you don't pay, you become a creditor of someone. You owe them money. Okay, and obviously what's in the bank. And that's what makes up the income statement in your balance sheet. The action, the sales, purchases on your income statement, the balances you haven't paid or people haven't paid you, goes on the balance sheet. That's what's called a balance sheet. It's the balance outstanding. That's as simple as books are. Doesn't get any more complicated than that. I mean, you look at that after next 2 hours talking about management accounts and stuff, and you know, yawn and be bored. That's what it boils down to. So that's what we're going to see like that. Income statement. The sales, there's the cost of sales, give you your budget or your GP, and then your overhead. What it costs you to keep your doors open, give you your actual profit. Very important problem is try not have much cost. Pay yourself rather. It's cheaper from a tax point of view to take all the profit out and pay as you earn, than leave a profit, pay tax on it. Then if you wanted money, you would pay dividend tax on it again to get the money into your pocket. Pay as you earn is cheaper. So rather take the money, pay as you earn, and pay for taxes on actual country tax. Okay. We've got a blog coming out in about 2 weeks that explains this with your small business tax. Have you had which one? Yeah, so what happens is the cheapest for money. You want to get the maximum amount of money in your pocket if you run a business. Is all your profit, whatever it is every year you profit, pay that to yourself as your salary. So pay as you earn is cheaper because pay as you earn works on a sliding scale from 18 up to 45. 45 is a profit of 1.7 or something million. It's like a hell of a healthy profit. Okay. Then it comes into the year, I don't know, 500,000. Then you want to keep out you have to myself 10,000 dollars from the before I do the yeah, so these are very good examples. So just make it 550 just for to make the tax calculation. Your small business makes 550,000 rand profit. Key profit to pay more expenses you've done. So if you leave that in your small business, you're going to pay just over 50,000 rand in company tax. Then if you want to now take that money now to pay yourself, you're going to take so 20% more tax gets applied to what left over. So 550 less 50 gives you like 500k left. 200,000 dividend tax later, you've got 300k in your pocket. If you take it all as paid and as sort of pay you earn on it, You're going to pay about 137,000 because the private sale from 18 up to 45. And I think 550 comes in at about 20 something. It might even be less, might even be about 19 something. And that's going to be like maybe 180,000 paid to earn, which is a hell of a lot less than dividend tax and company tax combined. Yeah. Look at our blog. When you're on you signed up to our blog, you did get them. So you'll see on the next blog that comes out. I'm doing that specifically because of the behavior speech. So that's why it's important. And it only becomes easier to pay dividends when you're earning that. And the number is massive, like 60 million rand a year salary. Then it makes sense to pay dividends. So, yeah. So the thing, income statement, personal balance sheet for management accounts. And when someone wants, they ask you for management accounts, that's what they're asking you for. So your accountant will print it off fairly easily. They now call it some profit and loss statement for your income statement and your balance sheet. So it's literally two pieces of paper. You can print it off the accounting platform. And that's what they ask you. Because normally if you go for funding, they want last year's financials, this year's management accounts. That's what they're asking for. Income statement and it's a balance sheet. Okay. Cool. So these are just some of the items that often get left off on an income statement, especially when you're working, like you have an accountant, you're working. Often people don't charge it. So if you take money from your company, so you owe the company money. You don't take a salary, but you owe the company money. The company is obliged to charge you interest. And they must come onto your income statement. So if you don't do that, charging you a dividend and tax 20% of that amount of money. So a lot of times, all the entrepreneurs and accountants who don't deal with small businesses forget that. Submit the client's annual financial statements, they get audited, and the client's going to pay a massive tax for no reason whatsoever, because they can't take it lazy. So just be aware of it. And then obviously discount. If you receive a discount on top products, you've got to put it against your income statement. The SARS is the book benefit. The SARS wants to see the benefit. So if you're going to get a discount for something, get your supplier to issue you an invoice at a lower rate. So if they say, we give you 10% difference, invoice is 10% less. Otherwise, my discount still goes onto the income statement. I'm going to pay tax on it, which is income, revenue. So just be aware of that. Expenses that often get missed. Like the companies are terrible, because we put it and we don't give all the expenses. Every little thing. Something that helps to buy a cool drink, keep the slip. You go pay for something on your own, like with petrol in. You take cash at the top, you do an ATM. Put the petrol slip in. Don't leave it. Because those little things add up. And the company will pay you back once it's making money. Often you see entrepreneurs don't give their account to the expenses they haven't paid. So I owe someone money, the invoice is there, give it to your accountant. Because if you got registered, you can pay them back on those invoices, even if you haven't paid them. Okay, so it'll make your books whole, because then you can look at your accounting and see, yeah, those invoices add up to 100,000, but you know, these are the clients, that's how much you owe, that's how long they've been outstanding. You don't have to remember the invoices when you pay them. Once they're on your accounting platform, you can just get your creditors as analysis and pay them as you need to, stuff like that. So don't not give your accounting service if you haven't actually paid the invoice. It's important. So that this is the limit. Cash that any expense in the deduction of income. Any expense in the deduction of income. So if you can link that expense to you making money, you can pay it. Any expense, that's the Cash Act. So that's specifically, that's for expenses. Right now, all of us very close comes to work. So you do that in yeah, but you've read that quite even with artwork. However, just embroidering your company logo on your shirt, now it's changed. It's not just everyday clothes. Uniform, okay? It's a uniform. Now you can claim it. But it's just let's say any thing. And to give you an idea of how outlandish I did practice for some exotic dancing. Let's not go into what type of exotic dancing is. However, her outfit that she never wore on the stage, her gym membership, those things you can claim for tax because that's how she earned your money. To keep her body in shape for the dancing, the outfit that she wore on stage as part of the costume. She could claim all the tax because that was part of her income. So any expense in the production of income that you unskilled, give it all to your accountant. Let us have the conversation. Because you might think, no, no, any expense, any expense. And on that day, that's slightly different because that's an entertainment services. So a lot of people know offhand entertainment. So that's an entertainment you can't claim. However, for our don't live there, the fact that we're down in Durban now, when you go out and eat dinner for entertainment this evening, because you're not in your hometown, you're away, you can claim the VAT and entertainment. So a lot of people don't. When you're traveling for work, you can claim the VAT on your entertainment if you're away, and your flight. So just the, there's like little nuances. Yes, so what you'll do is expenses in lieu of rental. So the business makes use of your car. And it happens often. So a lot of us will start our business, and it was easier for us to get a car loan when we had a job at a corporate. You tell if you want to, like you find this the same thing. You're going to employ staff. Your staff member wants to buy a house. You know what they ask the staff member? Can I 3-month process? When you apply for the same house, what are they going to ask you? Blood samples, 3 years, annual financial statements, reasons why, you know. Who do you think is going to lose their job first? You or your staff member, if the economy goes bad? But they're going to jump through smaller hoops. Why? So it's crazy. So what happens is a lot of entrepreneurs do have cars in our own name because it's easier. And then what happens is that we claim the expense in lieu of it. Instead of you renting the car from yourself, the business renting the car from yourself, the business will pay for fuel, it will pay for the licensing, it will pay for tires if they're tires, and claim all those expenses, yeah. So you can go as far as, and we've done it for other clients, where what they would do is they would rent the vehicle to the business. And so tax loophole with your earnings. So if you don't want to draw a salary per se, so you can draw the minimum earnings, the 7,000 odd a month, no pay there. But then you supplement your income by renting the vehicle. The other side of the rental contract is your expense, which is installment. So it's a no tax event in your life, but you're getting more cash tax in your pocket. So there's a little nuances. So it's bending the rule, but not breaking it, because of it. You might even breathe in it, but you don't break it. Okay. But on that, so that has its nuances. So if you buy, and it's so stupid it is, because I can go to the farmer's market, I can buy vegetables at the farmer's market, and I can sell it to a restaurant. I can't charge that because those things are zero and full back. Now if I put them in a plastic bag and I put a piece of butter with some garlic, and then I sell it to the restaurant, value added, I put that in, I'm a charge that now. Same product. That's your vendor. So your service is more than a butter. More than a million, yeah. Yes, yeah. But there's always little nuances. I mean, it's not easy. I mean, we study like for years to learn all these little tricks. So if you're such a guy that ever gives you tax advice, shut up. Don't tell anyone. Your circumstances are not the same as everyone else's circumstances. So don't pass one apply to you, but not to other people. So just be aware of that. Okay. The tax code management we did touch on earlier. Obviously, you want your tax cycle to be shorter. So you want the money as fast as possible. You want to pay people as late as possible. That's definitely the way to go. Okay. And then think about the actual deadlines in your life of your business. Obviously, a lot of people want to pay their staff on the 25th. I know we pay our staff on the last working day of the month. Because cash flow wise, it just makes more sense. A lot of times pay you later. So our staff don't get paid on the 25th, but if you work for government, you get paid on the 15th, the banks the 20th, most corporates on the 21st. So that's kind of, then you pick up on it on the last day of the month. So that's then obviously like that you're going to pay stars on the last working day, payroll pays you in on the 7th of every month or the Friday before the 7th is on a weekend. So those are just knowing these things are. Put them in your calendar, your Google calendar, your Apple calendar, and just set them on your sheet because they're going to remind you. Because then you know, there's nothing worse than payroll's coming. There's no money in the bank, but you've got to find 100K somewhere. So these things do happen. We are aware of it. Okay. And then the last thing I'm going to touch on is small business. And you're going to be horrified how few accountants know about a small business. We find most of our clients because of this. And that's the problem. So what's a small business corporation? So these are the basic actual criteria. Your turnover is less than 20 million. That's small, right? 20 million. So under there, you're not a personal services provider. So for us, for example, because we do the tax, so we physically do it. So it's personal. Like if you're in the sphere, if you a state agent, that's personal service. The business is on your personal service. Okay? So as long as you're not that, although there is a caveat, little aspect there, if you employ 3 or more people who are not family, then you can be a personal services. So a country firm with 3 or more staff that are not family, you're good to go. Okay. You and the other people, this is the only business, business and you own. So you and your partners, that must be the only business. And the reason for that is stars worked out very quickly when they introduced the law. I got a 50 million rand turnover business. I'm just going to split that into 3. And get the benefit from it. And obviously that's what they want to avoid. They don't want people now taking advantage of the cash flow. There are still ways around that though. So don't worry. There are still, if you have a business of 50 million, there are still ways around that. But basically, and then obviously you're not involved in any other companies. And you have to be individual. So you can't have a company owning your business. 20% of the income comes from your services, so professional services. So even though you might have let's say, a software company where you're fixing machines and stuff like that, if you're consulting as an IT person, doing IT consulting, your corporate are paying you, if that income is more than 20%, you don't actually qualify. Okay, so then, and obviously the business must be registered as a private company. So either a CC, a PTY LTD. It can't be a trust. It can't be an individual themselves, stuff like that. So must be yes to all of those. Okay. And then this is where the fun bit starts. The tax saving is only about 90,000, which is about, what is it, gas and go. What's the cheapest car? About a gas and go. Then a quick. It's around about there, 100,000. So the tax saving is a small business, only about 93,000, which is still, you can hire a staff member, pay them the minimum wage, even more than that, and you're an extra staff member of a taxi that you pay. But the real money comes in writing off the assets. So, for example, we had a client who to tell the story, I tell the story a lot. He made boots. And what they did was, they weren't very big. They're turning over about 2 million rand. We bought a whole new juice assembly line, cost him just over 1 million. Now, at the end of that first year, he could write off 500,000 rand in depreciation. So his profit of 700 odd thousand, he only has to pay tax on 200 odd thousand. And then a small business corporation is a sliding scale, so you end up only paying like 17,000 rand tax on all that profit. So this is where the real savings are. Then writing down the assets, and then I think like you buy laptops, you're in the IT game. Every laptop you buy, 100% write-off. Every tech. So we're going to pick out 50 laptops this year. The 50 staff starting, and write off 50 laptops this year. It's not going to take for about 2 years. But that's what the benefit of this. That's not just a little simple tax thing. And a lot of accountants don't know this. Because when you go study accounting, they assume two things. You're going to go work for a very large firm, so then they only want to do large corporation tax, or you're going to work at a big accounting firm. Not realizing 80% of accounting is for SMEs. So they don't study this. Okay, look at only that will actually have it. So if you buy a normal car, not a LDV, like a husband. Buy a normal car, you can't claim the VAT on the car. But 50% in the first year, 30% in the second year, 20% in the third year. Written off on your books, yeah. Massive. This is massive, and people miss it. And we see it often. So we meet these clients, and the first thing you ask them, can we have last year's financials, so you get an understanding of your business? And the first thing you look for is what was the tax on their financials. And then you ask them those basic things. Ask them these, get the first answers on. And invariably, they're small business corporations. Then the accountant hasn't applied the write-off. And then, of course, you can go back 5 years from your last assessment. Minimally, the client will get back 500,000 if they paid the full tax. 90,000 rand a year. 500,000. When you tell a client that, if I gave you 500,000 now, if you sign up to be a client, every client is absolutely. But once you apply all of these things, often the clients get back, sometimes one of our clients gets back maybe 5 million rand. Charles hates it, they audit the hell out of it. But it's legit. It happens a lot. So this is why the tax saving is showing you now. We're going to update this from this final number is dropped. It's just 38%. But that's the sliding scale. This is now 95, 91. But it gives you an idea. So in a normal company, maybe 95,000 rand, that's just the tax part every year. And people are overpaying this big time. So paying yourself, your budget, and know it's a small business. Those are the two things you take away from this talk. That's big. And if you've got an accountant who's done books for you, go check this afternoon. We can go back 5 years. Snare's going to be overworked. Sorry, Snare. So, questions on this? Questions on this? I'll just edit some slides so that we've got an analytics tool I was talking about for apps. We built this. It sits on top of accounting platform. So you can all the numbers, all of your stuff. So just roughly add it in. And if you've got the books right, you can see your trends, what you're doing, you can do your tax rate. That's quite important to have all your information inside the booking account. And a lot of them are free, like Wave is free online. So a lot of free accounts, you don't have to spend a lot of money. Yeah, so this is important. It's going to ask you for burn rate, how much of other people's money they have left. Yeah, profit margin, why you invest. So that's kind of should be done. Cool. Anything on that question? Cool. Thanks, Jim. So, as I said right at the start, this is going to be a series of talks that are running throughout the whole year.